what exactly is happening, what the numbers are saying, and then what are the other things that we're going to be seeing in the future as things come. Good day, Toronto. Welcome to another episode of Prime Properties TV. So glad you could join me here today. And on this month's podcast, I kind of want to go through the craziness of what milestone we just hit, which was breaking the average price of $1 million in Greater Toronto Area. It's still a little bit mind-boggling, and I can see there's a lot of media headlines talking about it right now. So what I'm going to do is I have this giant Excel spreadsheet of data and how I always like map things out and what the trends are. And I want to take this long form way to kind of explain to you in this podcast what exactly is happening, what the numbers are saying, and then what are the other things that we're going to be seeing in the future as things come, right? Because one of the main things I've been kind of like talking about a lot in the last, call it, almost a year now since COVID, is that the value of money is coming down. So we're really going to look at whether are we freaking out because we're at the average $1 million price point, or is it that maybe things are still the same, but the value of money is less, right? It's that simple economics example I always give, where like if you have 10 apples in the world and $10, each apple is $1. But if you have 10 apples and now all of a sudden you have $20, each apple is $2. So is the apple getting more expensive, or is the value of money less? That's something I want you to keep in mind as you're kind of listening and watching this podcast, right? So I'm going to share my screen here. And one of the crazy things when I had to look at the Excel spreadsheet was in the average price column here, you usually have to expand the columns a little bit. Because we broke $1 million, I had to expand a little bit, which was a little bit crazy. So I'm going to move my face out of here if you're watching this on YouTube. So you can kind of see right here that this yellow highlighted line, and for those of you who are just listening to this, I'm going to explain to the best of my ability without you having to watch it. But basically what's happening is you can see that currently we're at $1 million, like $1,045,000, and our inventory at 0.79. So the first thing I always want to call out is months of inventory is a leading indicator of where prices are going to be, right? So if you're low, then that means that there's not much inventory for people to buy, which means more people are drawn and flock towards the same property, which means multiple offers, which is why, I'll have a lot of people bidding on it and pushing the prices up, right? Like there's still a lot of these like houses that are being listed for like $999 and whatever it's going to sell for TBD, right? Like we can give you an example of what the previous one sold for, but if there's someone who's just tired of losing bidding wars and just needs a house and want to get it over it, they're either going to bully in really hard or they're just going to like pay a lot more than what needed to be, right? And this is why I was saying like when there's so much money out there, people are willing to pay more to kind of just get this process, quote unquote, over with. But one of the key things I want to show you is when I rank these months of inventory from smallest to highest, you can see that February 2021 is the second lowest amount of inventory for the entire Greater Toronto Area. Just let that sink in for a second. February is the second lowest month of inventory, and we're only behind by December 2016, which was kind of basically the month that started when all that, call it quote unquote, foreign money flocked towards the 905 and we're just like bidding things up, right? So you can see that we're in a crazy shortage of inventory, right? It's not about the type of supply we have, because if you actually look at some of the numbers that we have, right, like we actually got an increase in amount of listings. We got like 42% more listings, but the problem is when you have 40% more listings, but then you have 50% more sales, that means more sales are happening than listings are coming out, right? So even though we have like a really high amount of listings coming up relative to what we normally see in February, their demand is just so much higher, right? In this case, 10% higher. This is why the months of inventory keeps coming down, right? So when you kind of mix all this up, where's prices going to go? Probably up, right? Now, I am seeing that right now, that some of the pockets that my clients are looking at, I am seeing more inventory come up ever since I would say like the start of May. Now, most of them are still holding offers, right? So we'll probably find out in a few days how quickly these sell and how much they sell for, right? Because there was a period in February where we were looking for like legal 2 units in the Durham region, and all of a sudden 1 week, 5 properties came up that were like legal, which is very, very rare, right? I was telling all my clients, but I was like, okay, you know what? Maybe we have a little bit of an advantage here because now it's going to divide up the buyer pool attention to say, what we're going to eventually, like where it's going to go, right? Like, one buyer goes here, one buyer goes to B, one buyer goes to C, and it gets split up, right? And they all lined up correctly. But what happened was a whole bunch of bully offers came on a couple of them, and then all of them actually ended up selling for quite a lot of money and just like broke a lot of records anyways, right? So what I'm looking out for right now is, yes, there is more more supply that has come up in the last week or so, but I need to see what the inventory is, what the buyer demand is. Because if all of this supply gets gobbled up, that means we still have low inventory, right? Because there's not enough stuff for people to buy right now. So this is why we got to keep an eye on these things, because even though we're seeing a lot of these kind of like record numbers, if the demand outpaces supply, we're always going to be in the low months of inventory right now. Now I'm going to go through kind of each area as to talk about, what's happening, because I know a lot of people want to just get a bigger, not a bigger, but like a more in-depth analysis of what's happening in a quote unquote their area, right? So the big ones we always talk about is the 416 detaches, right? So on my screen here, you can see that the month of inventory is still at 1, which is really, really low, right? I monitor the months of inventory detaches because that's where a lot of the freeholds and 416 actually go to, right? Because there's a more supply of detaches than there are, like, say, semis in towns. That's why when you look at the chart, like, there's always more sales for detaches than there are semis in towns, just because there's more of them, right? And that's what is more, quote unquote, sought after. So now we're looking at $1.68 million as an average price. So when I rank them right now, you can see we're basically at the record. It is record high right now, right? For anyone who's not listening, you can see this is right at the top. Now the second highest is basically last month in January 2021 at 1.58 million. So right now we're at the whole new record. We broke through everything in 2017, which we wouldn't think we would break because those numbers were like in the high 1.5s. Now last month we basically broke it, and now we exceeded by another $100,000. This is how quickly prices are moving up in the Toronto real estate market right now. It's like crazy. So when we look at the month to month change, you can see that the detaches actually went up 6%. Now 6% per month is an astronomically high number, and then when you look at it at the $1 million plus range, it's a really high number, right? And I like looking at detaches because there's enough of a sample size to actually draw some kind of conclusion to it. Because if I look at the semis and the towns, which I'll talk about a little bit after this, the sample size is too small, right? Like if you have, like in the semis, you have 295 sales, which is a lot, averaging at like 1.3 million. But if you have a very, very nice semi, call it like a 3-story one. I know there was one on Logan, a semi in the East End that sold for $3 million. Like that's just going to drag the average, right? Even though you're at like almost 300 sample sizes, it's still not as much as what the detaches are, which is like 900, right? So I try not to look at the semis and towns too much when an average price, because that can fluctuate quite a bit. But what a trend you can see is that the prices for this is actually increasing higher than what the detaches are. And the reason for that is $1.7 million for a detach in the 4 and 6 is realistically not affordable anymore. Like if we use the whole formula of like 5 times the gross income, you're looking at like $350,000 of gross income in a family with 20% down to make the numbers work, right? So it's really, really out of reach for most average Torontonians. But like if you have like 2 professionals or like a doctor or a lawyer or something like that, yeah, it's doable. So that's why when we look at semis and towns, for anyone who wants to stay in the Toronto area, that's why you can 1.3 is a lot more doable, right? They're looking at maybe like $250,000 give or take for gross income, and then towns at 900, it's doable with like a little bit under $200,000, right? So that's why where these prices, when people want to stay in Toronto, they're going to go up a little bit higher because one, there's less of them to buy, right? Meaning that there's more demand looking in the 4 and 6 area, and that means more people are bidding on them. And because they are within range, within a more affordable, but call it, the upper middle class of the Torontonians, that's why those prices are going to be pushed up. I'm also pretty sure that the towns in 416 is going to break $1 million very, very soon. At the rate this is going, it's kind of bonkers. Like we have 12% increase month over month, and we also have 9% for 12% for towns, and then we have like almost 10% for semis. It's getting a little bit silly. But when you see these like month to month, I always talk about how like February prices are going up, right? But when you look at it relative to the entire GTA, like on the screen here, you can see that the prices only went up 8% in the GTA area per month, which is crazy, right? Like if you really, really think about it, like 8% a month times 12, I can't do math right now, like 9, that's like, if you sustain this, prices are going to double every year, which is not going to actually happen, right? And this is why I was saying like February numbers, because inventory always tends to be really low and people always have that idea of, oh, you know what, it's time for me to buy something in the new year. A lot of buyers come out, but then nobody wants to sell. And March, we tend to see more more listings come out. And that's why we see a little bit more stagnation in terms of the price, right? So what I'm going to do is I'm going to kind of filter out all the data for February. And I've shown this before, and you can basically see that right now where we rank in 2021 in February, the price increase of 8% month over month is actually not that high, right? Like if you kind of really look at it, oops, I broke my spreadsheet. If we really look at it, the increase in 2017 was 14%, which is the highest right now, which is just silly. It's just silly, right? But 2021 is behind 2016 February. It's also behind 2020 February, and it's all behind 2012 February, right? So proportionally speaking, this is not that high of an increase. That's why I was actually a little shocked. I was realistically more expecting kind of like a 9 to 10% increase month over month, but we didn't see that. But what you will notice here is even though the price increase was like a little bit lower than like percentage wise, you can see that our months of inventory in this month is the only one that's actually under 1. This is how tight the market is right now. Now, you have to remember, like back in like say 2017 or 2012, prices were not at 900,000 average price, right? Like even the highest point in 2017, the average price was only 870. Now we're at $1 million. So any kind of price change on that note, kind of similar to like the freehold detaches, it may seem percentagely smaller, but the actual amount is getting larger and larger, right? Because the number you're taking a percentage of is larger and larger. So that's something you need to consider when you're kind of comparing these kind of like every single month. Now, the other thing I want to kind of show you is don't freak out right now if you're thinking that you'll never get into get into the housing market, because when we look at, say, the March numbers, right, what you'll notice here is that most March, you don't see a very, very drastic increase. You just don't, right? Like even in the 2017 years, the craziness, you saw a 4% increase on a month-to-month basis, and that's really the highest. Everything else is actually like within the 1% range, meaning that there's not much price movement in March. So like the current month we're in right now, because I think more inventory is going to come to the market, like more houses are available, it reduces the amount of people focusing on those few listings and driving the prices up. But now you may say, oh, you know what? But I think prices will come down. There's a chance, but I don't think it's going to happen, because what happens is the people who list in March, they look at their neighbors who sold, and they're like, oh, that dude got X amount in February. I want that amount too. And the buyer pool is still large enough out there that when all this inventory comes on, you still have enough buyers willing to pay something like that. They will not necessarily like bid too much on it, because maybe if say you have one house coming up every single week in February and keeping the inventory down, but you have 10 buyers, that's 10 buyers to one house. But come March, let's say there's 5 houses that come out, right? And 10 buyers, now you have 2 buyers per house, right? Obviously, like some people like certain houses more, right? But the analogy here is that instead of having 10 people focus on one house, you have 2 people focus on each house, because there's enough to go around. So you don't have 10 offers coming on one house. You may have 2 or 3 offers on each house. So it doesn't drive the prices up like crazy. So that's why I'm saying, like, if you're looking right now, I wouldn't freak out too much. Like the amount of supply, seasonally speaking, should increase with what you're kind of accustomed to previously, right? So don't freak out too much about it. Prices should kind of stay the same, maybe increase 1-2%, as you can see here. Like, last year in 2020, we actually saw a dip in pricing. Just keep in mind, pandemic was in mid-March, right? And then the year before that, it went up by 1%. The year before that went up by 2%, right? And I'll project this out to you in April too, right? Because we're back to very much the seasonality of where things are going to be, right? So when we, look in April, you can see that, ignore the -9%. That's clearly the first month of the pandemic. But like in April, when like full on spring market happens, that's actually the 4% increase in 2019. Then we have the 2%. So this is why I was saying, like, don't freak out too much in March. If you didn't buy something you want in February, yes, you have to adjust to what your new expectation or what like your money can buy is. But you do have time from March to April to buy something. But what I will say is, come May and June, that tends to be the highest price in every month. Sorry, highest price in the year of every year. Meaning that June tends to have the highest average price. Meaning that May probably has the most amount of buyers and the lowest. Well, not most, but like the most amount of buyers come out to start looking, because that's when like the weather's warm and looking at houses are nice. And I don't know. I mean, Toronto just got lifted from the lockdown. I don't think open houses are allowed yet, but maybe in May when there's vaccines, who knows, right? So that's kind of when I will be expecting prices to increase again. So again, this is not to tell you guys how FOMO to buy something right now, but it's just to give you an idea of, if we were to follow the trends, what are we likely to see in the prices coming up, right? Now, obviously, this is all predicated on the fact that there's no craziness that happens, because, you know, if I don't know, another lockdown happens, it may affect the prices. Probably not. We've had 2 lockdowns and prices are still going up. But maybe like a government intervention, which I'll talk about a little bit later in the podcast, that comes in, then yeah, that may change stuff, right? Because finally the government's saying there's a little bit of exuberance in the market, and they're finally, you know, saying it. We've been calling this out since like December. But yeah, I'm not going to trash on that until maybe a little bit later. So now let's move into everyone's favorite area, the 905. So you can see here in the 905 area, we're looking at an average price of about $1.3 million. Yeah, $1.3 million, right? So when we look at the months of inventory, it actually went down to 0.82, which is lower than last month. But prices kind of stayed about the same, right? So, you know, last month we were at 1.3, it's like $8,000 higher. So we came down a little bit, but, you know, because the amount is so low, I would say it just kind of stayed the same. I want to say it went up or it went down. I'd just say it stayed the same, because the sample size is so large. Like, it's very hard to skew that number. But what I am kind of like anecdotally seeing when I'm trading every day is like stuff is selling for a lot of money, right? Like, I think I talked in the last video in like the quick briefing that like I see some stuff that basically sold for like $900,000, like a town with a single garage, but like stuff in like Richmond Hill and Vaughan, they're pushing like $1.2 million right now. Like, it's really getting up there. Now, I am seeing a lot more inventory come up, but it's the really nice ones where like kind of newer kind of house within like maybe 10 years, or it's been completely renovated, stage looks very nice. Those things are like pushing like $200,000-$300,000 over what they ask. Because of course, you know, agents are listing for $999, right? Huge waste of time, but you really have to understand what is kind of happening if you're looking in that area, right? Or just specifically in that kind of pocket, because when the market is so hot and like so many people are looking for the same property, it's going to drive the prices up. So some people would say, I'm doing it on purpose because they want to drive maximum traffic, maximum bids. Some people would maybe like, I don't know what's going to sell for, just let the market dictate it, right? So, you know, a little bit of both sides of the coin, totally up to how that person looks at it. But ultimately, prices are up like substantially, right? Like, you could also even look at the amount I have here, which is like the active listings and detached sales. Like in the 905 detached, like listings are up 50% from last month, which is normal, right? Because you're supposed to get a lot, but like 50% is a lot more than like what you normally get in the Februarys. But the fact that the sales have doubled, right, from 2,200 to about like 4,000 tells you that the proportionate amount of buyers versus sellers is off, right? There's obviously a lot more buyers than there are sellers right now. So I probably will continue seeing this for the foreseeable future. I haven't spoken to a lot of clients who are like, oh yeah, I'm going to give up my hopes of kind of like finding something. Because right now, the idea of buying like a larger lot, whether it's because of pandemic or work from home, it's still out there, right? Because they really want more space, right? Anyone who even like works from home or even like partially works from home, because like there's been talks about like some people want to go back to office, you still need that extra room to, you know, work or like instead of having your office set up on your kitchen dining table, right? So that's why space is at an all-time high, like the demand for space is at an all-time high. Now, when we move into the semis, right, you can see, again, the sample size comes down a little bit, but we're in the 905, we're averaging about 932,000, which if you really think about it is almost the same price as a 4 and 6 town, which is kind of crazy. The sales have basically doubled from last month. Prices are up 3% from last month into 900. I suspect we'll break $1 million probably by the end of June or so. And then when it comes to the town, which is more entry level 905 stuff, right? So this a lot of times are like rear ended towns back to back, maybe single garage. I know the double garage towns are a little bit more hot right now, but we're averaging about 845,000. Prices are up 5%. And then oddly enough, condos are up a little bit too, right? Where we're seeing a little price creeping up to $550,000 in the 905. And we're seeing this because some people now are just like, you know what, I want more space in the condo because maybe they can't afford the kind of freehold. So when you go to 905, when you go a little bit further, you actually get a little bit more space, right? Depending on which pocket you're in. Now, I do want to spend a little bit more time on the condo market and kind of like what exactly is happening. That's why I left it for last. So what I have here in front of me is basically all the numbers ever since pandemic started. There's like a black line here for anyone listening. That black line basically is 1 year back up to February 2020. And that, I would say, is the point in which marked for 4 and 6 condo was like peaking like absolute craziness, right? Like average price 722,000 and went up 6% in a month. And that was the peak before, the whole shenanigans happened of the pandemic. And you can see that prices start coming down. Now, we have to remember when I was talking about condo inventory last year in September, we were saying that it was at an all-time high, right? So you can see, I'm going to highlight the cells here. In the month of, no, not September, yeah, so October, we had 4 months of inventory in the 416 condo. We have not seen 4 months of inventory in like a crazy amount of time. Like when April happened, we got 4 months of inventory and it went boom, it was 3.92, right? So you can see our inventory increased like 250%. We went from having nothing to buy to basically a ton of things to buy, right? I think the number was like 4,000 something listings. And then come May and June, when we kind of opened back up, it picked up a little bit. And then when September, October, which was the mortgage deferral, quote unquote, cliff, and a lot of people are freaking out, we had a lot of investors kind of like offloading stuff, right? So the highest amount of inventory was at 4, right? The prices fluctuate, and I'll talk about it a little bit later. But what I'm going to point you out to that's really important is starting November, investors started coming back to the market. Now, whether it was end users buying it or investors taking advantage of the low interest rate, I talked about how you can refinance your house at 1.5% and like pull out $100,000 and buy a condo if you want. You can check out the little video. It's on the eye on the top right hand screen. But this is when inventory started decreasing, right? So from November to December, we saw an inventory decrease of 44%, meaning it got halved. So you can see we went from 3.8 in October 2020 to 3.65 in November 2020, and then we went to 2 in December 2020. Keep in mind, Christmas time. 2 in December 20. Now, I always make the joke that, I like to buy real estate and go shopping during the holidays because I have a little bit more time. But it looks like a lot of other people were thinking about that too. Then when we go into January, we see that the months of inventory decreased again by 31%, going from 2 to 1.39. And now at the end of February, it decreased another 36% to 0.88. Just think about that. The condo market right now has less inventory than the average than most of the other freehold towns. The only things that have less inventory than the condos right now in 4 and 6 is the detached 905, and it's very close, right? Detached 905 was at 0.82, and condos are at 0.88 right now. So when we talk about pricing, the pricing went down and it's slowly creeping back up, right? If we look at kind of when the pandemic hit, we went down, we rebounded back up. It's kind of been like minus like a few percentage points, right? So now in February was the biggest jump we've seen in the last year at 8%. So that average month-to-month increase is actually higher than what the total GTA area is, which was 8%. So you're at 8.3 versus 8%. That is an astronomical number because what's happening is there's no more condos to buy. That's why the inventory is at 0.88. We're seeing multiple offers everywhere, and it's pushing the prices up. $676,000. When you look at it from year to year comparison, yes, we're still down like a few percentage points, right? Because the highest in February 2020 was 722,000. But are we going to break that point in the very near future? I would say so, because all the condos that are good, I'm seeing multiple offers. All the builders who have pre-con for condos that are selling are basically pushing them. And I'm hearing a lot of the projects are selling out. People are really busy right now. So, the whole idea of refinancing your primary home or a line of credit for $100,000 to buy a condo or something, that is what's happening. It's basically set a precedent for kind of like what the lowest amount of condos are going to be. Like, but the rental market hasn't caught back up yet. But because money is so cheap right now, and it's basically too much of it, a lot of it is going to the condo prices because they're very investor friendly, right? Like, when you're buying something $500,000-$600,000 for, a professional income, that's still within reason, right? Is it fair to first time home buyers who have a hard time saving for their, first down payment, even 5 or 20%? No. But this is kind of the game that the government has created in the debt system that we're in, right? Where anyone who owns asset, when you can refinance at such a low interest rate, you can pull out money so quickly because real estate prices rise so quickly, as opposed to someone who's saving for their down payment for the first time, right? Your incomes will never catch the rate at real estate prices. That's inflation right there. But, the government won't acknowledge it until like a few weeks ago. Now, what I did... I'm not going to go. I'll go down that rabbit hole a little bit afterwards. But what I did prepare is I prepared some kind of charts for everybody here, right? So, sorry if you're listening to this, you may have a chart. But when we look at the average price for 416 detaches, you can see it kind of zigzags and zigzags, right? And you can basically see that we're trending to a whole new high at $1.7 million. And we're never going to basically come down to it unless something catastrophic happens to the market. So for anyone who has aspirations of owning like a detached into 416, prices have gone up. And I think you may have to adjust your expectation. And with the inventories, at 1 month, unless a ton of inventory comes online, I suspect it's probably going to stay quite low and the prices will stay quite high. Is it the right thing? No, but do I think prices will increase for like, at least another 4 or 5 months? Probably. Yeah. Can I see another like 5% increase until like the end of summer? Yeah, probably. So 5% on $1.7 million is, oh boy, math again. So it's be another $80,000 increase by the end of summer. I can definitely see that happening. It's very reasonable. When we look at the condo side, right, you can see prices basically went up, which is what I'm pointing at the peak in February 20, and it came down. This was the pandemic, and then kind of prices leveled up and leveled off, and then went down as the quote unquote mortgage deferral cliff. And that's kind of when I think the only kind of segment of the market that was affected by the deferral cliff. It wasn't really much thing, but like if there was some minor click, that's what it was. But then now prices are coming back up. But what I'm show you is the months of inventory graph. You can see basically starting since 2019 in December, the inventory for condos have like steadily be below 2, and it keeps going lower and lower and lower, and that's why prices keep going higher and higher. But then the pandemic hit, and then we hit 4 months of inventory, but then some of it got absorbed, and then the mortgage deferral cliff went back up to 4 months, and now we had a massive rapid drop from basically 4 months of inventory, like I was saying earlier, to 1. This is visual to show you how quickly the inventory gets absorbed. And now when I map these two things against one another, right, blue being the average price and the orange being the months of inventory, you can see they are basically the inverted version of one another, right? And this is what I always say. When months of inventory comes down, prices go up. When months of inventory goes up, prices go down. So right now there's a rapid months of inventory going down for the 416 condos right now. What do you think is going to happen to prices? Right? It's just me explaining the data to you and why I say, look, is this going to happen? Probably. Is something I can prevent it? There's a chance, but am I going to bet on that and not make a move in the real estate market? No. That's why I talked about, like, if you have FOMO for something, you really have to understand the reason why you're buying into it. Because if you're just buying because you think you're never going to get in, maybe reassess what you're going to do, right? But if you really need a place, right, then yeah, you have to do it. You have to accept kind of what the market is right now, right? Let me just move my face over here. So now I'm going to do the exact same thing when I look at the average price for 905, right? So the 905 detached specifically, you can see prices steadily go up. And then we had the foreign buyer tax that came in 2018, right? Sorry, not foreign buyer tax, the COVID. Oh man, I'm mixing up my years. So when COVID came in April, prices came down a bit, but they actually they rapidly went back up, right? So you can see in February, this is that, like 12% increase over 2 months, which is crazy. Now, when you blend that in with the months of inventory, again, there was that massive spike from COVID where inventory was over 4, and then it just got absorbed really quickly because I guess people were making a move. That plus 905 also includes rural areas and like Sugog and stuff like that. So the cottage country is hot. And then when you map the map out against one another, you can basically see like that spread between the 905 detach and the months of inventory. Sorry, 905 detach average price to the months of inventory. It's again almost like an inverted amount. Like the months of inventory fluctuated so much more than what the average price was. But when you scale it out, that gap between months of inventory that's over here and the average price is going to get bigger and bigger unless the months of inventory changes, right? So that's what I was saying. Like whenever we're looking at these things, months of inventory is super important to pay attention to, because without looking at the months of inventory, which is like I always say, it's the leading indicator of where prices are going to be, you will have no idea what is going on, right? And when you're going to hear a lot of like nonsense from everybody, but when you like just look at the data and what it says, you can mix that in with kind of like what I see or like what you're hearing economically, then you have a pretty good idea of what's happening. It's not to say like I have a crystal ball, but when we look at trend, when we look at history, that's why people study history. We have a pretty good idea of what can happen based on how people are, reacting to certain things and how much kind of this supply happens. When we go back to my example of 10 apples and $10, this is the exact same thing, right? The amount of apples or houses keeps getting less and less, but there's still a lot of money in the system right now. So that's why prices keep going up, right? So those are the reasons why I'm saying, look, I do think prices are going to increase for the foreseeable future until I say like the government decides to do something, but I don't think they are going to basically ride out real estate, because they even said it themselves. One, they're going to try to keep interest rates low, because everyone's rebuttal to me being built bullish on the market is like, what if interest rates interest rates increase? Everyone's screwed. Well, yeah, I mean, it definitely, but it's not just real estate that, is affected by interest rate. Like companies are affected by real estate, right? Like corporations, the government themselves are in massive debt. Everybody's debt servicing increases. So debt servicing is basically just like, a fancy term in finance for saying how much money you have to pay to kind of pay for the interest on it, right? So if like all of a sudden everyone pays, call it $100, a month to kind of pay for the debt they have, right? It's like same thing with credit card loans. You pay your minimum, you just make sure that's fine. No, everyone's happy. Credit card companies make money. You don't have to pay that much money. That's what it is, right? But if you increase your debt servicing from $100 to $200, everybody's affected, right? So that's what interest rates are. So you can't just be like, oh yeah, they're going to increase interest rates. Yeah, they probably will at some point, but are they going to like kill and destroy the whole economy? Probably not, right? Because like corporations borrow money so that they can drive more productivity. And this is why I'm saying like interest rates aren't just for real estate, it's for everything. So do I think they're going to mess with interest rates a little bit? No, but like they can mess with other things, right? Like if we were truly, truly trying to slow down the real estate market, and let's just, use the condo example over here, right? Like if they really want to slow down investors from buying condos, rather than kind of increase interest rate and kind of screw over the first-time home buyers, which I honestly don't think politicians are going to want to do, why don't they just increase the amount of down payment you need, right? So instead of 20%, just make it 40% if they really wanted to slow down the real estate market. This way, the first-time home buyers are still able to buy stuff, right? And they can save up there. But anyone who is buying an investment property, they need 40% down. So on a condo that's $500,000, you need $200,000 instead of $100,000. You think that's going to slow some people down? Absolutely, right? But are they doing it? No, not really. Are they pulling other levers that they could do? They haven't yet, because that's what I'm saying. I think the government is trying to ride out real estate to make sure that there's GDP growth, right? The economy is going to come back because real estate produces a lot of income, right? There's land transfer tax for the cities. There's a lot of jobs like realtors, mortgage brokers, insurance brokers, finances, contractors, right? There's a lot of stuff that's going on when real estate is booming. And real estate, I keep talking about it, like real estate's like, I think 21% of the GDP when you include construction. It's insane. So are they going to kind of go through the exercise of reducing the activity that's going to happen in real estate? I don't think so. Is it the right thing to do? Really depends on what you look at it, right? Like as from a politician side, you can't win them all, right? You can't appease everybody. You're going to basically choose the lesser of evils. And are they letting the real estate kind of like bubble, quote unquote, let's call it, run up some more just so that they can make the economy come back? Maybe that may be the lesser of the evils, because the government has been saying like they rather have people be back on their feet, and if they have to ride certain things, then they will, right? So this is what I was saying, like it's very, very hard for me to like say prices are going to come down, because like when I look at the data and look at how the behavior of the government is, they're just kind of looking at it this way, right? Now, one of the things I do want to draw everyone's attention to is kind of like everyone's been talking about how 905 properties are going up like crazy. In a previous video, I talked about something called the gap, right? Which is like the difference in terms of how much a 4 and 6 condo is versus 905 detached. If you want a little bit more explanation, I'll put that in the little I button in the top right corner. But I've mapped it out at the recommendation of someone to use a percentage, right? But I'm just going to use a multiplier. It's just so it's easier to understand. So you can see here, the 4 and 6 condo right now is the blue line on the screen. You can, it's basically what we were talking about before. I'm just mapping out the chart. And then the 905 detached is the orange line, right? So you can see that they kind of match one another. When there's a dip, there's a dip. That's the COVID. When it goes up, that's pre-COVID. When things were up, heading back up. So you can see that they're kind of the same. But what happens is when the one outpaces the other one technically has to catch up, right? So what I did here is I took a multiplier. So normally what happens is, or not normally what happens is like normal multiplier between a 4 and 6 condo and a 905 detached is somewhere between like 1.5. Right, you can see on the chart here, January 2017. This is really, really early on the craziness, right? So you can see the multiplier was at an all-time high because the pricing in 905 shot up before the foreign buyer tax, right? Now the average price came back down in the orange line, and then the multiplier came back down. But at that rate, you can see the multiplier is coming slowly down more because the multiplier, like how much a detached 905 cost, was way too high relative to the normal multiplier. So the condo prices had to catch up, right? So this is why in 2018, 2019, we saw such a boom in the condo prices, right? They went up like 50, 60%. So as the condo prices came up, the 905 kind of stayed the same. They never really did much, right? So the multiplier kept dropping and dropping and dropping. But there's a whole bunch of like weird things here. That's just COVID, just ignore it. But basically after April, you can see that the multiplier has now shot up. We're basically where we were in 2017 before the foreign buyer tax. So the 905 is now more than 2 times the cost, like a 905 detached is more than 2 times the cost of a 4 and 6 condo. Now, are the 905 detached prices going to come down? No, I don't think so. Like I was saying that earlier, right? Unless they do some crazy things, but I still don't think that's going to happen. Like I meant the government. So what does this mean? When people are priced out of 905, they're going to flock towards condos. This is whether first-time home buyers or end users, we call them, right? They're going to be like, okay, you know what? It's time for me to forget my dreams of owning a freehold because clearly the prices have outpaced how quickly I can buy something. Now they're going to look at condos. Or when the prices of detaches have gone up so much, back to my example of people refinancing their place and then buying condos. This is what's going to happen. Is the 4 and 6 condo market right now undervalued? Yes, it actually is. We had a lot of clients who told them you should start buying now because we did expect prices to go up. And again, like the last few months, the condo market rebounded so much faster than what even I would have expected. And again, I'm very bullish on the condo market. So are we going to see a significant increase in the condo prices? If we were to, I think we'll probably see it in like May, June, just because there should be more supply that comes out and more people are trying to buy, right? So for us to get back to the 1.5 multiplier of where prices are right now, if the average, detached home right now is $1.3 million, to divide that, to get it down to the 1.5 multiplier, which is kind of what the average is, the average condo price has to be $866,000. Just let that sink in for a sec. $866,000. It's at $670,000 right now. The highest to 4 and 6 condos ever at was $722,000. So here's my little disclaimer. Don't have a crystal ball. I'm just looking at data. You guys can take this for what you want. Are we going to see condo prices have a huge spike? I don't know what the huge spike is right now, but is it undervalued? Yes, it is. Is there opportunity for it to grow? Absolutely. Should you buy a condo right now? Depends on what your portfolio is, right? Like a lot of my clients are still chasing cash flow. Are you going to cash flow in a condo right now? No, right? That's the simple answer because the rents in downtown, anecdotally I'm hearing things are starting to pick back up, but they're still very suppressed, right? Very, very suppressed. So should you buy a condo? If it's your first investment property, I'm always for you should get more cash flow first. But if you want to buy a condo, you definitely can because if you're strictly after capital appreciation, it could be there. Now, should you buy pre-con so you don't have a tenant? Well, it really depends what you buy in pre-con, right? Pre-con has been like 40% higher than resale right now. So like some of these big projects in downtown that came out were like $1,600 a foot. In the current landscape, even though prices are going up in the resale market, I'm still seeing things for like new condos that are like 2 years old that are not under rent control. They're still trading at like $1,200 a foot, depending on the building. So you really have to weigh out like your negative cash flow versus how much premium you want to pay for the pre-con, right? So again, it depends on the situation. Is this to say that 905 detaches are going to stop going up in price? I don't think so, because the months of inventory is so low, right? So, what you want to do with this information I'm providing to you is up to you, but you really have to figure out what the situation is for what you want to accomplish, right? That's why I'm saying, like, I can't give a blanket, an explanation for a lot of things. Like, I have a lot of people email me and I do my best to help them out, right? They're like, hey, I'm thinking about buying this. And I'm like, well, you really have to find out what it is you want to do, right? Like what your goal is, because the amount of strategies you can do in real estate is different. You probably don't know all of them because you've never kind of tried them or haven't, guided people through them. And most realtors will basically just push you to one thing that they're focused on, right? It's kind of like car salesman, right? If you go to a Lexus dealership, you only can sell Lexus, even if you wanted a Mercedes or whatever, right? That's my point, right? If you go to a realtor who only does pre-con, they're not going to tell you anything else because they're not going to sell you anything else, right? So you really have to figure out what you want to do, right? That's why we have different people on our team that specialize in different things, because we know that the correct way to guide our clients through different things is find out what their why, what their goal is, and then work back the strategy to the type of lifestyle that they want to eventually get to, right? Again, if this is all very confusing to you, it's basically to sum up that everybody has different goals. There's different strategies for real estate. If you want to figure out what works for you and what you're trying to accomplish, I'll put I'll put the link to book a strategy call with me here. It's www.chatzen.com, and then you can book a call and we can figure out what works for you. Now, I'm going to kind of like go back to some of these numbers, right? So are we going to see kind of this like leveling off in the 416 905? I think there could be a little bit of leveling off, maybe not the rapid prices. So this is why the multiplier could get smaller, but that means the condo prices are going to go up. But ultimately, I think both are still going to go up. And if I really had to take a hard gamble, I would say the 905 will probably outpace the, at least detaches anyways, will outpace the condo growth in the next 4 to 5 months. And then I think once we break that like 1.4, 1.5 average price in the 905, if we get there at this grade, then it's gonna be like, crap, done, right? Because affordability is out the door. You're basically needing $300,000 income to buy a 905 detached. So right? That's what affordability does. So it may drive the condo prices up at that point. This is why I'm saying you got to pay attention to this multiplier and the swing. I'm not saying that this multiplier can't get to like 3x. It very much could. It just really depends on the behavior of the buyers and what they're looking for, right? Because we're still in a pandemic, people still want more space. So is this going to push the multiplier to like 3 times, 2.5 times for the first time ever? There's a chance, right? That I can't predict the buyer behavior, but in just speaking to a lot of people, space, like I was saying earlier, is still at an all-time high. So that kind of is a summary of what's happening and what the data is, and I'm going really, really deep into it. Hope that's helpful to you. One of the things I was telling you about is I want to kind of talk about monetary policies, and this is going to bore the crap out of a lot of you. Like I was trying to show my wife, she was not impressed at all. She was not interested. But you have to understand how interest rates and some of these things are working to your advantage, right? So this week, I think on the 10th, which is Wednesday, they're going to announce the interest rate, whether it's going to go up or down, right? I suspect they're probably going to stay low. But one of the things I was saying is last week, the bond market, and just keep it very simple, the bond market equals the fixed rate mortgage. Bond market went up, fixed rate mortgage went up. So it went from 1.49 on average to about 1.99. Is that affecting the market? To an extent, but is that going to mean more people are going to go towards a variable? Probably, right? Because most people, I'd say, gravitate towards the lowest interest rate, right? Like they don't understand, like the breaking costs and all the things that come along with it, but they just gravitate towards lowest interest, and that's what they shop around. So when you can still get a 1.4% mortgage interest rate, yeah, you think it's the fixed going up may not affect it too much, but some people may go over the fixed. Is the fixed potentially go up more because the bond yields are getting higher and higher? Potentially, but the variable, which is kind of like correlated to the prime and the Bank of Canada interest rate, not really. It's kind of still the same. I haven't heard anything from it. And then the other thing I was going to show you, I have on the screen here. I'm going to bring that over. Yeah, here we go. So you can see the interest rate and how it's kind of like changed is before the pandemic, we were at 1.75. You can see it went on boom, boom, boom. It dropped all the way down to 0.25 ever since pandemic. And it's been like this for a very long time. That's why money has been cheap and it's out there. And this is going back to what I was saying, like a lot of people are refinancing their places and they're able to pull out so much equity because prices have gone up, but then the cost of borrowing has gone down. So that's when you have so much money into the system, back to the apples and money analogy, 10 apples, $10. When there's more money there, the houses are now going to be more expensive because there's just a more supply of money. You can see here that they haven't changed any pricing, and the schedule for 2021, like I was saying earlier, is March 10th. I don't suspect anything's going to change. They'll probably, keep it at 0.25. I know they were talking about even dropping it by like 0.1% or 10 basis points or 10 pips, however you want to talk about it. But I suspect it's going to stay the same. Is it going to be a big factor whether it goes up or down? Probably like just a smidgen. It won't change too much. There was another thing I wanted to kind of show you guys, which is very, very interesting. I just don't have the link. I'm going to pause this for a second. Right. Okay. I found it. So this is a very interesting chart. I was saying earlier, I tried to show it to my wife. She's not overly ecstatic about it, but when I found it, it was very interesting. So let me give you a little bit of like background as to what's happening. You know how I was saying earlier, 10 apples, $10. But what if we measured housing not by dollars, but by gold, right? A lot of people say gold holds their value. You always hear the saying about how, an ounce of gold back in the day could buy you a suit and a nice dinner. Same thing right now. An ounce of gold could buy you a nice suit and a dinner. It's because gold holds its value. Back in like before the Bretton Woods system, meaning like the actual dollars, the money, like they turned these like, I call it cash, right? The banknotes, that was actually backed by gold. So for you to issue out $1, you had to have $1 worth of gold. But ever since the Bretton Woods system, they changed over, and you can basically have money not backed by gold anymore. So that's what fiat is, F-I-A-T. It's basically just what we're told that is what it's worth. It's the exchange of currency, because gold is harder to kind of like swap and melt down and change to people, right? So just giving paper that is worth what we think it's worth is there. And the reason why I'm explaining it to this, right, is I'm trying to give you an idea is like what you think money is worth is probably not actually true, right? So that's why a lot of people are getting really big into Bitcoin right now, because Bitcoin is what we call hard money. It was like gold before because gold was hard money. So instead of looking at real estate prices in Canada based on dollars, right? Because like I was saying, there's more dollars in the system. What if we looked at real estate prices based on gold, right? So there's this cool little chart that I found here. For anyone who is listening on the podcast, I'm sorry, I will put the chart in the show notes. I'm going to enlarge this a little bit. So you can see here, it looks like a really, really busy chart, but what I'm going to explain to in a simple way is this gold, sorry, not gold, is it gold? Orange? This yellowish gold orange line that's coming down is a measure of how much gold you need to be a millionaire. Right? Because gold becomes more valuable as there's more money in the system. So the amount of gold you actually need becomes lower and lower for you to be a millionaire, right? So, back in July 2010, January 2011, you needed 758 ounces of gold to be a millionaire in Canada, right? So basically this line that's coming through is what dictates $1 million in equivalent of gold. Now, the purple line is Calgary single-family detached, SFH is single-family detached. The red line is Toronto single-family detached, and the blue line is Vancouver Toronto detached. So you can see here that the amount of gold chart here is relative to how quickly it comes down, which is fine. But as more and more money is printed, it's easier to become a millionaire, because if you have more money in the system and say you're selling apples, if you went from selling apples for $1 each to $2 each, it's easier for you to make $1 million. It's a lot of apples you're selling. But my point is, like, there's more money in the system. So to quote unquote be a millionaire is a lot easier, right? So in this example here, you can see that on January 13, the blue Vancouver single-family detached line basically crossed that yellowish gold orange line which meant that the Vancouver real estate prices went over $1 million on average, single family detached. You can see that the exact same thing in July 2016 for single family detaches in Toronto. Calgary hasn't gotten there yet. We generally talk about Toronto and Vancouver. And you can see that instead of having the prices rapidly go up, when I compare the chart that I have for detaches in Toronto, you can see on the right-hand side, the prices have basically kept going up and up and up. But you can see right here, the peak of the single family detached pricing is actually in 2017 in January. Interesting, right? Before the foreign buyer tax. Think about it. So this means that when we are looking at kind of the value and the storage of money, is real estate prices getting more expensive or is money worth less? Think about that. Think about that, right? Because you can see here, this line is actually trending down right now since 2017, both for Toronto and Vancouver. Think about that. So even though in 2017, in my chart on the right-hand side, you can see that prices went from 1.5 at the highest peak, and now it's at 1.7, which technically should be the opposite of what this chart on the gold side. But if we measure real estate prices in gold, prices are coming down. And gold is a good store of money because what I was saying earlier, 1 ounce of gold can get you a suit and a nice dinner 80 years ago, can do the same right now. So really ask yourself the question, if we have 10 apples and $10, each apple is $1. If we have 10 apples and $20, that apple is $2. So we have, say, finite amount of houses because we don't build them fast enough, and we have much more money coming out because refinances, serve money, people saving, everyone's just flocking towards it. How much can this house actually go for? Right? How much money is in the system right now? We don't know. We have an idea that, there's about $1 trillion of debt in the Canadian government system. It was $500 billion and it's doubled now. So are we going to see prices double? Right? Back to the $10 to apple thing, right? When we look at real estate prices, they're actually going down relative to gold. Something to think about, right? So when we all talk about how, mortgages are easy or harder to get, it's harder to qualify right now. But when you intrinsically look at the economic system and how money is being created, right? Like when you get a mortgage, you're just creating money out of thin air, right? Like the banks don't have that in the vault or anything. Like they're sitting on a percentage of it called fractional lending, but like they don't have the full amount. So when you need $1 million to buy a home, they don't have $1 million in the vault. Maybe they have $100,000, right? So when the government turns these knobs on how much money can be created in the system via mortgages, which is the most common way, that means more money is being printed. So the more transactions happen, technically more money is in the system, which means that the asset, the very hard to come by, the desirable asset that is the Apple/real estate becomes more desirable and there's more money trying to buy it. This is why I tell all my investor clients, why are you selling assets? So where are you putting your money? That asset is holding its value, but the money that we are told to use, the fiat that's no longer backed by gold, is not holding its value. I hate saying this, but cash is trash. There's nothing you can do with cash that isn't. That's why even for us, like when we refinance, we're like, okay, we're sitting on a bunch of money. We got to deploy it somewhere. The deploy is the word we use because we need to put it into assets that are going to do better than the value of money, right? Because more money in the system makes things more expensive. That's why you see this boom in Bitcoin, asset prices, right? Stocks, even like Pokemon trading cards, which is funny because I'm trying to find my Pokemon trading cards. Oh my goodness, they're going for so much money. But like people are trying to put their money into a store of value, into something that isn't easily created, is what I'm saying. So stocks may not be as easily created, right? Gold is hard to create. Bitcoin, there's a finite amount. First edition Charizards, they're hard to come by, right? So when you put money into something that is more rare than how quickly money can be created, it stores its value more. So that's why there's so much money in the system and why real estate prices are going up. It's not that real estate prices are going up. It's the money you're using or you're told to use to buy it is being worth less.
real estate prices, if you measure in gold by this chart, is actually going down. So think about that when we were all talking about, oh, we just broke the average price of $1 million and what the heck is going on, right? Is the $1 million, that's the milestone, that's freaking you out? Or is the fact that getting $1 million is that much easier now? Think about it, right? If all this kind of makes sense to you and you're trying to figure out what to do with your real estate or other assets, or like you have some money you want to invest, I'll put my contacts and the link to book a call with me at www.chazan.com here. If none of this makes sense to you, but you're like, oh crap, some of this Apple economics thing makes sense to you, you're like, I need to figure out what to do with asset, what works for you. Again, book the strategy call. It's in the link on the screen right now for you. Hopefully this was helpful for you and it gives you a little bit of an idea of how I'm thinking, the data points, the monetary policies, and different ways to just perceive what we're told, right? Like you really have to have critical thinking and to think about what money actually is, because unfortunately, if you're not educated on this, it can really mess with you financially and your family in the future, right? Try to keep it the words PG. So you want to keep things on very like kind of high level, understanding everything. Don't just focus on the milestone of $1 million average price, because realistically, if we're following this real estate based on gold value, real estate prices are going down. It's the money that you're holding, leaving under your mattress and your bank account and checking account, that is becoming worth less and less and less. And that's what inflation is, right? It's just we're inflating things so much faster. That's why prices of lumber has gone up. You go to a grocery store, it's costing you more. That's what it is. You need to put your money and store into something that's more valuable, because money is worth less and less and less. Cash is trash. Until next time, guys. Happy real estate. Stay safe. Talk to you later. Bye.
Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.